This is Eric Muathe with Muathe.com, January 14th, 2021. As we are in the middle of January 2021, the market is continuing with the same behavior it had in late 2020. Now, this is a good thing, but also for those of us who've been trading for many years, we know what it means. Let's take a look at some stocks, shall we? Because I can tell you for a fact, right now, most participants of the market feel like they are stock picking geniuses. Okay, that's okay. But generally speaking, if not all the time, it tends to coincide with a market just about to change its makeup, its behavior, its outlook, its temperament, its attitude. You know what I mean, right? Whenever it's happened in the past, it's generally led to uncomfortable markets, to put it lightly. All right, let's take a look at some examples here. Here's a stock that spent most of 2020 sideways, just doing nothing, sideways. Really, apparently it never existed until suddenly, quote unquote, it just became a favorite for the market. Now, if it was expensive here, or here, or here, or here, or here, how does it trade here in a couple of weeks? Now, this one in particular was a breakout alert just 3 days ago. Just 3 days ago. Put that in perspective. I gave out an alert to paid clients at about 26, 27, somewhere here for this breakout. Right there. And within 3 days, the stock has gone from, let's call it, under 30, and within 3 days has touched 50. So somebody was buying it here, anticipating more. And maybe there's more, who knows? But such is the climate right now. The market is in such a fantastic giving mood that those of us who've been in the market for a minute, and we start watching out for potential change. Let's take a look at another one. And let's go here. Okay, so here's another instrument. Now, this one, I do not believe we owned this one, but it's one that is showing you the temperament of the market right now, the behavior, the almost, what word am I trying to use here? Just the, no need for this at all. Makes no sense. But here's a stock. Now, by the way, all of these stocks, as they begin to move, they meet the minimum requirement. And maybe that should be the reason for this video. All of them meet the minimum requirements for the ultimate Muathe breakout. So I'm not even going to spend time on the method. The method works. But what I'm talking about in this video, there's the closing bell. What I'm talking about here is this stock broke out under 3.5, and in about a week, this is a weekly chart, in about a week, it's gone as high as 1180. Now, that's not a stable market. Something is off. Something is off. The crowd is delirious because if you could not buy it here, it was extended or was expensive. Why you buy it here? If it was expensive, extended here, how do you buy it here? Like in the same week. Okay, that to me, all right. Here's another one. This is more of what you expect in a good market. I'm not gonna talk. This one is a good one. This has taken many weeks, but again, a good move. Our last breakout was here. This is our breakout entry right there. And the stock has gone from, this is now September, in a couple of months, it's gone from under 70 and now trading at 190. Not the biggest moving instrument in this current market, but this has become the normal behavior. It's expected, right? I mean, it's like, come on, give us more. Let's take a look at another one. Did not own MicroStrategy, and those of us who've been in the market long enough remember MicroStrategy. Everybody who was trading in the late 90s remembers this stock. In fact, it was a poster child for what happened next. And I wonder whether it's going to do it again, be a poster child for the excess of this current period. Now, this breakout here is a classic ultimate Muathe breakout. Classic ultimate Muathe breakout here. After 3 weeks of rest, there's a breakout right there. That breakout was 3 weeks ago under 320, 330. The stock has gone as high as 625 in 3 weeks. What changed, people? Now, 350 in January, this stock in January, right? In July, the market didn't love it as much. It was trading under 125. So one of these markets is dumb. Either this market in July was stupid, or somewhere around here this current market is playing stupid. We shall see. Now, by the way, I'm not saying to run away from stocks. I'm saying to be careful. Play the market until it gets tired. As long as the market is in this awesome, generous mood, we'll accept the fruits. As I've been saying for many months, it is the season right now. Not only is it the season, it is the dream season for those of us who play momentum. By the way, I mentioned the late 90s. This stock was a poster child for the market excesses. Take a look at this move in the late 90s. Let's zoom in, shall we? We can see in the late 90s, the stock broke out somewhere here. And we can say that that was at about 200. By the way, just to put things in proper perspective, the stock was trading here in January of 2000. The stock split 2 for 1. So whatever prices we're seeing before January, multiplied by 2. So in a sense, before January, the stock was trading at breakout level of 400. It went all the way to the highs here, we can say, of, what was it? 3,600 before the split. But after the split, which is what we have here, we can see the breakout here. And this would go on to become the poster child for the dot-com bubble. An amazing run that had pretty much made no sense. Like, why was it trading at a different price here than here or here? What changed in those couple months other than just complete loss of balanced look of the market? Something was off. At any rate, we can see here ultimately the market did rebalance itself in what was not a very good behavior in the market for anybody who was buying the instrument here. Essentially, there was a, let's call it 90+% erosion from the highs, which is typical of such moves. And yes, of course, you want to play this move on the way up if you can capture some of this beautiful move, but there's a risk. And so you always have to be kind of careful for that, not necessarily being panicky, but just understand that the market's being not rational. And so you have to be ready to protect yourself. So since we have a teachable moment here, this was one of the most, if not the most explosive move in the late 90s. Right there. Let's test the ultimate Muathe breakout. Spend a minute here. And we can see that the breakout took place in the middle of 1999. And we were going to party like it's 19. So you can see it does meet the minimum requirements right there. RSI jumped above the magic number, 69.1. MACDs would go to 3-year highs minimum. There's your ultimate Muathe breakout. The rest is in their record books. So I find it curious that this stock is doing something similar in the current market. And truth be told, it really doesn't matter what the reason, the current reason for the move, whether it's crypto related or all that stuff, is excuse for being irrational, in my humble opinion. So in a sense, this current move by MicroStrategy is puny, is tiny in relation to what it did in the late to early 2000. So almost synchronized exactly 20 years later, it is doing this. We shall see what this shall mean for the market as perspective down the road. Time will tell. And here's one more. This is Tesla. Again, it really doesn't matter what the reason for this steep climb is. It really doesn't matter. It's just an extension of the market's behavior, market's mentality right now. And yes, we captured all these breakouts. We were all over this one. I think there was another one somewhere here. We've captured all of these breakouts. Not a problem. But again, it just goes to frame how the market is looking towards what prices and where prices should be. Something's off is my point. So yes, we play breakouts and continue to play breakouts, but with a little bit of a cautionary outlook. So get them while they're hot, but be careful. Eric Muathe, Muathe.com. Love, light, light, love. Namaste.